Hello, I'm Grace. Tensions are reaching a fever pitch in global financial markets as the possibility of an interest rate hike by the Bank of Japan, BOJ, becomes increasingly tangible. With the BOJ's monetary policy meeting imminent, the prevailing market consensus suggests that a rate hike will be announced tomorrow. Historical data shows that when Japan took similar steps 2 years ago, the domestic stock market exhibited extreme instability. At that time, the KOSPI, the benchmark stock market index of South Korea, plummeted by more than 8% in a short period, delivering a significant shock to investors. The core risk factor being cited in the current situation is a rapid shift in capital flows involving low-interest Japanese yen. This refers to the yen carry trade, a strategy where investors borrow yen at low interest rates in Japan to invest in higher-yielding assets in other countries. If Japanese interest rates rise, investors will be forced to sell off those assets and buy back yen to reduce the interest burden on their borrowed funds. Such a sudden withdrawal of capital acts as a catalyst, driving down asset prices globally, including in emerging markets and South Korea. Compared to the previous 8% crash, the psychological pressure currently felt by the market is more than just a matter of simple figures. Reports indicate that the previous plunge went beyond a mere index decline, accompanied by a widespread fear of a liquidity crunch across the entire market. There is a high probability that Japan's decision, this time, will also cause the yen to surge, serving as a turning point for global asset markets. This should be understood not merely as a change in Japan's domestic monetary policy, but as a fundamental reshaping of global capital flow routes. Ultimately, Japan's interest rate decision is expected to act as a key external variable, determining the volatility of our domestic stock market. Investors must closely monitor the scale of Japan's rate hike and how the direction of its future monetary policy will trigger a chain reaction in the value of the yen. As uncertainty grows, a cautious approach is required, learning from past shocks to closely observe the evolving market trends. I'm Grace, thanks for watching.